G'day traders, free cash Friday, a monster end to the week. And I think several traders, the last few videos have cemented some concepts together regarding timings, levels, and the behavior of price. And today we're going to talk about the mindset, the evolution of a trader. And I'm going to use myself as the reference point and talk about some things that will hopefully help traders with their own self-talk, their own belief systems, their own attention to detail, their own belief in their own success, their ability to achieve, their ability to become consistently profitable, and the ability for others who are already consistently profitable to scale their business up in size. So there are several speed bumps, I guess you would say, in the profession of being a discretionary trader, trading your own capital, and obviously aspiring to achieve certain levels of income and growth. And everybody has a different idea of what success is in their own mind. But in terms of the first and foremost, the approach for me was about building a process that had edge in terms of the setups themselves. And that took a lot of refining, took a lot of heartache and painful learning, because there was a each time you would reach a new level, there would be another learning lesson, as you're constantly learning, as I repeat, 1% better every single day. And then being in control of yourself emotionally. There are circumstances within your own personal life that you cannot control. We all have grown up with different belief systems about success, different beliefs about what success is, about not only within our ability ourselves, what our own ability to achieve, and then also our lifestyle and our surroundings, our environment, the people we hang around with, the people that we continue to hang around with, whether they're aspiring to become 1% better a day, or if perhaps maybe they're not the best people to surround yourself with, if your goals have maybe distance yourself from them. Not to say that you can't remain friends, but you have to obviously be around people who are going to help you get to that next step on the ladder. So trading itself is riddled with speed bumps and potholes. And first and foremost, you just in terms of the practical application, a lot of traders are trading every day, trying to catch moves and get pips or get money. And they don't really understand what edge is. They think they do, but they don't really have an edge in terms of their process and their executable setups, their ability to extract profits out of the market consistently. There are a lot of tactical things that traders will struggle with. They'll get out of a winning trade too fast. They'll hold on to a losing trade too long. They'll never be big enough on a big profitable trade, and they'll be too big on a losing poor quality trade. So there's constantly these battles, which again comes back to a lot of the process and setups that I gradually sort of cultivated, wean back the garbage. You want to focus on opportunities that even when you are maybe less right, you're still going to be profitable. And then of course on the bigger template, the 3-day opportunities that are parabolics, you have the opportunity to make some significant income, especially over time when you're rinsing and repeating, scaling up in size. So simplicity is the day count, the templates, the timings, the levels, and then the behavior of price. So one of the things that people commented on, getting shaken out of winning trades, or when a market kind of coils sideways for 15, 20, 30 minutes, I want to emphasize that on a day like a Friday, when we've got we're on the backside of a move, it's the 3-session day 3 closing range of the week. So I want you to think about the different types of opportunities that you're going to get. We already had major red news. The session is now in full trading mode. Potentially may end up closing at whatever point for the week and may not come back. So what that means is this: when we see these explosive moves in that first hour heading into the New York Open, especially on the indexes, the parabolic type of explosions. That explosive, fast movement is what gets traders chasing a move or convinced that they've missed the move already. And then when the market does reverse, if it's a reversal type of opportunity, when I say reversal from that parabolic, because we're first red day on the indexes, we were in a parabolic mode on gold, a 5-day template, which I'll talk about in a second. First red day, Euro CAD. There's a few first red day, second day trades, Aussie dollar, New Zealand dollar. But when that market, after major red news, coils sideways and the session hive day is locked in, the speed is all of a sudden gone. The impulsiveness is gone, and it slowly just starts to work its way down. And part of that is twofold. It's designed to get traders to second guess a winning trade. Then they've got traders who are in the money from being in early in the parabolic move. And it gets them to second guess whether they should take the money, and it falls ever so slightly and slowly that it gradually keeps working into their profitable trade, but it doesn't move fast enough that traders in the short position get that parabolic drop right away where they're in the money. It just slowly kind of works its way in the downward direction. So here's where experience comes in, because when you have experience and you know that it's Friday, it's not Tuesday on the front side, it's not Thursday on day 2 on the back side, it's free cash Friday on the closing range of the week. And so we potentially now have a market that remember, we're at the high of the session. Target may be the low of the day, the low of the week. Doesn't have to go 500 pips, might be 150 pip drop, but some traders are getting out with 30, they're getting out with 40. That's where experience comes in, and the confidence to understand that speed now, the rapid explosive movement on the front side of that impulse on the first hour, is what gets people chasing the move. That slow movement on the backside is what shakes traders out of a winning trade, scares traders from getting into that winning move, or gets them chasing it after it drops a certain amount, which at some point they'll maybe pulse it up 25, 50 pips into that move, usually with a timing rotation. Traders who are in the winning move, because it moves so slowly, are convinced that it's going to retest the high, and they hold on to it, and they get the popcorn trade where it goes all the way up and all the way down, the around the world trade, and they get stopped out at break even. Or maybe they hold on to it and it ends up turning into a loser because they didn't take money off the table, didn't have preset targets because they were convinced it was going to go through to the high of the day or the high of the week or whatever. So these are all things that come with experience, but understanding the day is so important. It's Friday. It is not Wednesday. It is not Tuesday. It is not Thursday. It is Friday. Friday is the closing range of the week. And so again, we're a 3-session setup on day 3 at the end of the week. Major red news is over. We have a template in place, a Monday, Wednesday, Friday template. So these are all the things that slowly come with experience. The parabolic trade in gold, a lot of traders said, oh, you got in before the news. That trade's been building since Wednesday. And I said that yesterday in the video. This is a channel, a 5-day channel. We have major world events going on that will affect the price of gold theoretically, but we had a 5-day parabolic channel. And if you stick around long enough, that's a once-off event. You're going to see it maybe 2 or 3 times a year in gold. Last time we saw it was when Russia invaded the Ukraine. That was a massive 750 pip move. But the parabolic template and understanding what it does on the day 3 parabolic, when it ripped 200 pips, and that started in that 7 a.m. hour. So there's a gain experience. I'm not suggesting for people to trade that, but I said earlier in today's post, don't try to counter trend gold. It had the potential to do another 100% range expansion on top of the 200 pips that it moved today, and which is now currently in the process of doing. So when you get an opportunity like that, there's going to be 2 or 3, maybe more times a year when you get some one-off events on certain instruments that are going to allow you an opportunity, if you understand what you're doing, to make an obscene amount of money fast. And those are types of days where traders that don't have experience try to counter trend them and they blow their entire account out. So again, the hurdles and roadblocks and stumbling blocks that you'll encounter as a trader, discretionary trader, managing your own capital, trying to grow it in size. But parabolic trades, day 1, day 2, day 3, session 1, session 2, session 3, are the types of opportunities that have enabled me to grow an account fast. How big? How big can you grow it? You can grow it as big as you want. But you have to be able to manage yourself. You have to be able to manage your impulsiveness. Like today, that we have all these opportunities. And when you get a day like gold, or you get a first red day, you get an opportunity where the markets give you that free cash, like Jim Rogers says, laying on the floor. All you have to do is walk over and pick it up. A lot of traders want to go back and keep trading. They want to get more because they got some pips and they got some cash. They want to get more because the market's moving. It's all over the place. It's still going. They get in. All of a sudden, bang, it stops. It starts working against them. They average into it. They want to get some of that money back that they just, the high water mark. They're up on the day. They don't want to give any back, so they average back into it. And it keeps going against them. And it goes just far enough to where maybe does a significant ding into their account so that it bends their arm far enough where they close it out or they get stopped out or something. And then bang, it goes right back to where the original direction was through the low of the day or whatever that is. So managing yourself, having the awareness to walk away, take the money and run and come back next week. Day 1, day 2, day 3. Same process. First red day, first green day, inside day. Okay? Parabolic trend trade, a parabolic reversal trade. Today's template on the index is those are day 3 templates on a Friday after a first red day. 3 levels of rise, U.S. session. NASDAQ hit closing price from yesterday into the high of the current day. Major red news, coiled sideways for the dump. Back through the low of the day, low of the week. DJ30 S&P pumped up, dropped down and engulfed the micro M structure on the 5-minute chart. Major red news at 10 a.m. Dropped down 30 to 45 minutes, right? 30 to 45 minutes after major red news. You get some of that slow moving market, 30 to 45 minutes. Have the confidence to know the type of template that you're in and be understanding that it's a Friday. It's not Tuesday. You're not trying to sell the front side on a Tuesday or a Wednesday where they're going to retest the high. It's free cash Friday. We're already on the back side. We have first red day. They pumped it up. They've locked it in after major red news to previous day's closing price. High of session, high of day to low of day, low of week. So it takes practice. It takes experience. It takes patience. It takes understanding what your edge is, really knowing what the setups are. Again, I go to the one hour charts, study those templates over the weekend. Day 1, day 2, day 3. Step back. Know what front side, back side is. Understand when you've got a trading range. Day 1, day 2, day 3. Closing price could be 50% of a range on a day 3 for a parabolic reversal, a parabolic trend trade. Okay, depends on the template, the setup, all of those things. The type of box. Again, there's going to be opportunities every single day. We're going to be able to find day 3 setups almost every single day if you're patient and you go through a basket of instruments. Doesn't mean you're going to get 250 pips every day, but if you got a 50 pip move, even 4 times a week, 3-4 times a week, where there are 90-10 best trade setup candidates, you have the opportunity now to grow your trading business. Stepping back, no stress, okay? Simple, repeatable, timings, New York Open, levels, high of day, low of day closing price, behavior of price. Is it a pump and dump or a dump and pump? If you're not sure what those are, go and study them. Because all the watching, all of those things, marking things, all those things, great, but you have to cut your teeth in live time. You just have to cut your teeth in live time. Use the clock. If you're using an hourly template, Monday to Friday chart, understand the importance of the rotation of time. 1 hour, 1 hour, 1 hour. 30 to 45 minutes, that's 1 hour, right? 1, 2, 3. That last part of the hour, beginning part of a new hour, are when we can see that price reverse or continue for an explosive parabolic opportunity. Manage yourself, master the templates, master the process, master the setups, master execution in live time, master your emotions, master the skill. Rinse and repeat, grow it over time. Free Cash Friday, massive week. Goldzilla did not disappoint. That rip made people a lot of money, and it is still going. Have a great day, traders. Great weekend. We'll be going over the charts. Keep it simple. There is no foo-foo dust or fairy dust and all these other things. You can make it really complicated, or you can do a rinse and repeat process. Monday, Wednesday, Friday. Day 1, day 2, day 3. Day 1, day 2, day 3. New York Open. Closing price, high of day, low of day. It is simple as that. Keep it simple. If it's simple, you can reproduce it. If you can reproduce it, you can grow it and scale it up in size. Love you and appreciate you. Have a great day, and may the markets go with you.